What's good? What's good? What's good? Back with another episode of Over the Counter Podcast. We are the Good Brothers of OTC. Man, it's kind of quiet in the market. I mean, it's a lot going on, but it's actually kind of quiet at the same time. It's kind of weird. Um, but we gonna get into all that. We got Ripple makes one of the biggest purchases in digital asset industry history. I want to talk about U.S. Treasuries and stablecoins, how they will play off of each other, and how both of them will be important to the future of finance, especially in America, but also from a global macro perspective. We got some Nvidia news we need to get into, and then we'll kind of give some overall market sentiment and how things are, what we feeling, how we can see things going from here. But yeah, man, let's get into it. Won't be a long episode, man. We're gonna get right into it. We're gonna make this short and sweet. So, starting off, let's talk about this Nvidia stuff because that's actually fresh on my mind. We
So,
got what's up with these restrictions, bro? What's going on?
so apparently, of course, we don't have a ton of details. The news just came out a few hours ago, but as of a few hours ago, Nvidia just disclosed that the United States government now requires a license to export its H20 AI chips to China and certain other countries, which would impact sales and inventory. As a result, Nvidia expects up to 5.5 billion in charges for Q1 2026 related to H20 products, mainly for inventory and purchase commitments, as shown in the filing that they put out today. So the stock has reacted negatively. The market is not liking it. We dropped big and after hours after the news came out. So we're currently sitting at 105.12. We closed at 112.20 and we're sitting at 105.12. Now down 6.31% in after hours. So, like we've been talking about, man, we thought we had the news a week ago that, certain tech, AI laptops, semiconductors, a lot of other, things that have to do with the tech sector being excluded from tariffs. The market ran up. Everybody was excited. We thought, we could breathe, but we said last week, that we're still not out of the woods and, kind of be on standby, because Trump can change his mind at any time. And then shortly after that, they put out news that, hey, these things will get tariffs, but they'll get their own special tariffs outside of everything else. And now, we're still waiting for that to roll out, but we get this news from Nvidia today, and Nvidia probably besides like TSM, the biggest player in the semiconductor sector when we're talking about AI, infrastructure, data centers, all of that kind of stuff. They get hit with this licensing deal, and you can't say I'm surprised. And Jensen Wong did meet with Trump, I believe last week. They had dinner and they spoke about some things. So I kind of thought that maybe, he may not get hit with a massive blow, but I guess that's not the case, man. And he got hit, and we'll see how they rebound, man. We'll see how Trump proceeds. But what this is showing me is that, we don't know the full rollout of the tariffs when we're talking about the tech sector specifically, because we haven't seen a lot of those details come out yet. But with this little bit of news coming out in Nvidia, and we see how Nvidia has reacted, I would almost be willing to bet that we see once those full tariffs start to roll out, the tech sector is going to take another hit. We're going to go down deeper, which means there will be more opportunities. But that also means we'll have a lot of uncertainty, not necessarily knowing what the future holds, at least in the short term, while these tariffs proceed on really how to move, man. So, it's sticky times in the market. I wouldn't be mad at all if you're letting money sit on the sidelines and kind of, just stacking up capital, waiting to see what's going to happen. If you still believe in Nvidia, which I do long term, once we get out of this tariff situation and we start to get some equilibrium about the market, I think, things will turn around. But as of right now, man, it's crazy in the streets, man. It's crazy. These tariffs, things change by
Yeah,
the day, and all you can do is, pay attention, stand to know, watch your positions. The famous Jim Cramer, said that he is going to be, you know, reducing some of his exposure to the Nvidia stock, meaning, he's probably going to sell some of his shares out of his position. So, with that being said, I'm pretty sure there's going to be a lot of uncertainty and fear in the market when it comes to Nvidia and the tech sector as a whole, because if Nvidia is affected, that means all of our biggest tech companies in the Mag 7 could potentially be affected. We know this specifically only has to do with China as of now with the H20 chips. But if Nvidia's bottom line starts to get affected drastically, I think that could lead to other implications. So we'll try to see how it goes, man.
Yeah, yeah. No, I mean, Trump is really trying to put the clamps on China right now. Um, Nvidia already had it restrictions for the types of chips that they could even sell overseas, especially to China. So to even see further restrictions is actually kind of, man, that just gives us insight into how Trump really not playing related to China specifically. He making deals with every other country but China right now, related to these tariffs. So that's kind of crazy. But you brought up Jim Cramer, bro. We in the crypto community, we look at Jim Cramer a little different.
Hey, come on,
Everything
man.
that man
Everybody say
say,
do the opposite of what he do. Everybody keeps
bro,
saying that.
and it works. I've legitimately made trades based off of
Hey,
Jim Cramer. I've
that's
done the
wild.
complete opposite of what Jim Cramer has tweeted or posted out on socials, and I made
That's
bread off of that.
insane.
So
Let
the
me ask you
crypto
this,
community, go ahead.
because you've talked about gold a lot over the last couple of weeks, couple of months.
Right,
And
right.
I was watching CNBC earlier, and of course, if you've been paying attention to gold, year to date, gold is up. What is gold? Gold is up year to date about 25, almost 26%. And we're currently sitting at $3,281.80.
Mm-hmm.
And gold is running up. It's looking beautiful, but I heard this correlation. I heard, and you tell me if it's true, because I haven't pulled up any charts to verify this, but they said that historically, well, over the last couple of years, whenever gold runs up, Bitcoin tends to run up behind it, lagging about 50 to 100 days, but it usually always trends up and tries to catch up, not necessarily to the price, but as far as performance, running
Yeah.
along what gold does. Is that true? Or have you seen any evidence of that in the markets?
I have seen that, but I I more so pay attention to M2 money global supply because historically, when M2 money global supply, especially has been ticking up now, in fact, it even broke out. There's a 10-week lag with Bitcoin and the rest of the crypto market. So we're about almost there at the end of that 10 weeks. So I kind of expect us to take a little dip, kind of like we've been doing here in the last couple of days.
Mhm.
But I expect the crypto markets to start ticking up to catch up to M2 money supply. But it also wouldn't surprise me if we went past M2 money supply in terms of performance and caught up to gold. 30% or almost 30% year to date is insane. Now, I'm a my caveat though is because gold has ran so hot, I do expect a little correction in gold to come pretty soon.
I can see that.
Because it's been
But
running hot for a long time.
but it seemed like the more uncertainty we have,
Yeah.
people are, moving capital over to gold. So
Yep.
because you see, as long as this uncertainty continues, as long as this tariff tension, especially with China, continues, gold can continue to run up at least in the short term until this tariff situation is resolved.
Absolutely. Absolutely. I wouldn't be shocked I wouldn't be shocked by that at all. It's a lot of macro stuff that's going on that a lot of people don't pay attention to. That is honestly what's driving the market. I talk to a lot of crypto related people in my network, and bro, they eating in DeFi right now. I mean, they are absolutely eating, and they're utilizing stablecoins to do so. So in crypto, that's kind of how you park or take profit, but still earn on your profits without being in a volatile asset. So a lot of my crypto bros, man, they eating on stablecoin yields right now, and stablecoin yields are a bit down, because everybody's offering up their stables for lending or some type of liquidity provision. So it's a lot of stables in the ecosystem right now. So I'm seeing yields for stables about like 6 or 7%, which in traditional finance is still amazing. You don't get them type of returns parking your cash in a traditional bank account or even a high yield savings account. Because I think the highest I've seen a high yield savings account go is like
4 or 5,
4%.
4
Yeah,
emotional 4 or 5. Usually they talking 399, 299, something like that.
right. Something like that. So to be able to consistently earn 8, maybe 10% on stables,
Okay,
boy,
so
please.
let me back you up for any listeners that are not familiar with the term stablecoin. Can you explain what a stablecoin is really fast?
Yeah, so a stable coin is a digital asset that is backed 1 to 1 to the US dollar or cash equivalents like US Treasuries. Um, so company or stablecoin issuers usually use a combination of actual liquid cash and US short-term US Treasuries, whether that's like 3 months, 6 months. Some of them even keep like 10-year notes on their balance sheets to be able to back the minting of stablecoins. So yeah, that's basically what a stablecoin is.
And then when you're talking about DeFi, can you explain what DeFi is? You know, simply put, not for anybody that may not be familiar with DeFi and how that relationship lies with a stablecoin.
Yeah. So decentralized finance, otherwise known as DeFi, is the ability to leverage or not. I wouldn't even say leverage. I won't say leverage. That's a bad word. Especially in this context. It's the ability to use your capital, your digital assets in a way that earns a yield, whether that's providing liquidity to facilitate swaps on an exchange, or you're lending out your capital for others to borrow against and you're paid a yield on that. I mean, there's several ways in DeFi to enable yourself to earn passive income with the same digital asset without selling it.
Gotcha. So there y'all have it, man. For those of you that don't know about, and what is a stable? What's one of the most popular stable coins? If somebody wanted to go look into that.
Yeah, I mean, you got plenty of them, but two of the most known ones are Tether, USDT, or Circle's USDC, which stands for US dollar. Yeah, US dollar coin. Yeah, that's basically what it is. And like I said, stable coins, they're backed 1 to 1 to cash or cash equivalents like US Treasuries.
So it's so plainly put, you could describe it as a digital dollar in a way.
Yeah, very much so. So,
Fire.
hey,
So,
more you know, the more
yes,
you
sir.
know.
Yeah.
But while we on the topic of crypto,
Hmm.
we had Ripple make one of actually not even one, the biggest purchase in digital asset history by purchasing the prime brokerage Hidden Road. Now, what exactly is a prime brokerage? In traditional finance terms, a prime brokerage is usually a firm that allows you to leverage, that's the right term for this, leverage your equities to get margin. And what do I mean by that? Basically say, and this might actually be a bad example, but say you got Tesla stock. You
Hmm.
don't want to sell your Tesla stock, but you want access to liquidity. Well, you would go to a firm like Hidden Road, a prime brokerage, and say, hey, I have this Tesla stock, not trying to sell it, but I need access to liquidity. They'll go through and do their risk assessment against your Tesla stock, and they'll say, okay, based on our risk analysis, this is how much we can give you in terms of liquidity. Obviously, if the Tesla stock drops in value past a certain threshold, you can get liquidated. That's the risk. right? So meaning when I say liquidated, that means yes, you indeed got the liquidity and cash to do whatever you need to do without selling that Tesla stock. But because the Tesla stock is now worth less than the amount of cash that you received for liquidity, we're going to take this Tesla stock to make ourselves whole. Meaning you lose your Tesla stock because of it losing its value against the amount that they gave you for it.
So they allow you to collateralize your assets in order to get access to capital. So if that's the case, say, would you to do it as like a home loan or something like that? If you provided, say, $100,000 in collateral, we're talking about Tesla stock. So you provide
Mhm.
$100,000 in Tesla stock, you would want to take far less capital compared to that just to give you a buffer so that you don't get liquidated. Is that how you could play that?
Yeah, that's called loan to value ratio, LTV. Um, and a lot of lending protocols, even in DeFi, because this is not a new concept. This has been a thing, even in
Yeah,
traditional finance. So yeah, say you got $100,000 in Tesla stock and you need some liquidity for against that. Based on the risk analysis, they may only say, hey, out of this 100,000, the LTV that we can give you is 20 or 30, right? So yes, your Tesla stock is indeed worth more than the amount that they're giving you, but that's a safe, it's almost like a buffer,
uh-huh.
right? And that's actually to protect you,
Yeah,
because the more you take out against that Tesla stock and the more and more you get to an unhealthy ratio
that's
in that
unfair.
LTV, the higher chance you are to getting liquidated.
I think
So,
that could be dangerous, man. You know, some people like that. Some people like to push it.
hey, if as long as you understand the risks, me as the prime broker,
Yeah.
my obligation is just under making sure I've explained to you the risks and understand that, hey, you know that if your Tesla stock is no longer 100,000 and it
Uh-huh.
start dipping towards that 30,000,
Yeah.
I'm taking this Tesla stock to make
It's
myself
just
whole.
it's just crazy to me that of course you have to have your own risk management
Right.
as the person who's taking on that essentially a loan
Yeah.
against their assets. But it's just crazy because you're gonna liquidate my Tesla, and you know that as the lender, you know that the Tesla is gonna go back up in value eventually.
Absolutely.
So I'm still on the hook. I would not be on the hook for the cash anymore that I bought,
Mm-mm.
correct?
No,
But you just got off
you
on
just
me.
lost your Tesla
You
stock.
got
Yeah.
off on me with 70K essentially.
Right.
Mm.
Right.
Plus
Mm,
some
mm,
if it
mm.
when it goes up again.
Right.
That's a dirty
But see,
game.
this is why I love crypto. This is
Yeah.
why I love crypto. So there are protocols, new age lending protocols that are coming up to where there's a such thing as liquidation free leverage. Meaning I can take those same assets, get liquidity against it, and not have to worry about liquidation. I ain't got to worry about it. And I still got liquidity without selling my assets. So even if the principal asset that I put up as collateral, even if it dips, I'm not worried about liquidation. But even when, and if you play it right, depending on the asset, if and when that asset appreciates, you could walk away with a profit. It just depends. It really just
So
depends.
so when we're talking about, we've talked about stable coins and other digital assets. We've talked about multiple ways that you can earn a yield, rather it be through lending, liquidity pools, earning a yield by holding, certain assets. Are those the only ways that you'll be able to earn a yield on these assets?
For right now, yeah, that's pretty much it. I mean, that's pretty much all you really need. If I'm being honest with you. I mean, there's plenty of builders out there in the crypto space that are looking for. I mean, there's like restaking protocols where people, and this is getting like mad technical. So if don't worry if you don't understand what I'm about to say, because even people that are considered crypto native that's been crypto investors for a long time still don't necessarily understand this particular concept, but there are restaking protocols. That's essentially what we call them, and they allow you to earn a yield by offering an asset in the form of stake to secure a protocol or offer security to a protocol by proof of stake. And basically, what that looks like is, say there's some type of protocol on a totally different network or whatever, and they want security in the form of stake to better protect their protocol from exploitation and things of that nature. Well, they can do that by getting what's called, restaking services or something like that, AVS. Actively validated services is what that stands for. And that essentially allows me and you, regular individual, to offer security to these protocols in the form of stake. And in return for offering that service, that protocol pays you a yield. Um, by having proof of stake, it basically makes that protocol a lot harder to exploit because the exploiter would have to have more than whatever dollar amount or dollar value in the form of stake that is protecting it. The exploiter would have to have more of that in order to successfully exploit that protocol. So again, that's super technical. I kind of might have butchered the explanation there a little bit, but don't worry if you don't understand that one, because that's one that's had over the last couple of months, maybe the last year or two. That's a new form of earning a yield on your assets that has become popular in the crypto space. So something to look out for.
Well, there you guys have it, man. Talk. It's a little crash course on some DeFi, some opportunities.
Yeah.
Especially now, man. I think now more than ever, it's important to start looking into other opportunities, other than not saying that you shouldn't be long term investing, because of course, you should be long term investing. But that's not the only opportunity to make money. One, protect your assets. Two, and three, the one that a lot of people don't talk about, that you've talked about a lot on this podcast, is earning a yield on your
Hmm.
assets. In the stocks, we have such thing as dividends and things like that. But other than that, stocks are pretty limited when it comes to yield bearing opportunities. But on the crypto side, they're having things like DeFi and liquidity pools and collateral and all that kind of stuff. So, just expanding your knowledge, just so there's more than one way to skin a cat. There's a lot of ways to make money, protect your assets, make your assets make money for you while they grow in value as well,
Hmm.
and to be able to create or generate income without actually selling your asset. So it's a lot to think about. It's a lot to think about, but we'll be talking about that a lot on this podcast, because I know it's something that you're passionate about, something that you spend a lot of time researching and learning and developing. So it's a
Oh
good
yeah.
thing. It's a good thing for you to look out for.
I've been in the lab for sure, especially as of late. Because like you said, things are kind of uncertain. So instead of, hoping and praying that, my crypto assets appreciate, I've been deploying my capital into DeFi protocols, not necessarily yield chasing, because that's how you get screwed, but looking for those low risk, safe opportunities, smart plays within the crypto space to earn a yield consistently without having to, like you said, sell my assets and hope and pray for the ultimate price appreciation. But yeah, we'll definitely be getting into that in short order, maybe in the future podcast. But getting back to this hidden road situation, um, you know, Ripple plans to integrate a this prime broker that is now their IP, their under their umbrella, into more DeFi related activities. Uh, who knows how Ripple will actually leverage some of the tech and some of the knowledge that comes with Hidden Road, but it's very exciting. I know a lot of big players in the crypto space behind the scenes. I mean, there's conversations being had right now. I know a lot of CEOs that aren't necessarily part of Ripple or even affiliated with Ripple. I mean, hey, they looking at this like, hey, this might change the game. This this is opening the door for opportunities that we didn't even I mean, we knew we could have, but we didn't think it would be right now. So that's also a super good thing. Um, but we'll just have to see, because right now there's not a decentralized prime broker. You can't rehypothecate crypto assets as efficiently as you probably could in traditional finance. In traditional finance, you can have, like I said, those equities of Tesla, get a leverage position, or borrow against that position to get margin, and then use that to go and do something else, or use the value of a position that you have in one place and rehypothecate that and use that value elsewhere. So crypto is definitely maturing. And like I said in a previous podcast, as much as I may not be keen on traditional finance, I got to give traditional finance its credit, because it influences a lot of the innovation that goes on in crypto. So um, don't be surprised when crypto directly mirrors what's available in traditional finance. We're just making it more efficient. That's it. That's it. So definitely looking forward to learning more about this hidden road situation. Like I said, $1.2 billion deal. Um,
That's big.
that's major, bro. That's super major. Definitely major implications for Ripple's stablecoin ROUSD. Major implications for the XRP ledger, which is the blockchain behind the scenes. And yeah, we gonna see what's to come around this, for sure, for sure. But I want to kind of pivot real quick into U.S. Treasuries and stablecoins. We briefly touched on stablecoins, kind of explained that, but I want to circle back around how U.S. Treasuries and stablecoins kind of are symbiotic of each other, meaning I see them becoming more and more tied together. Um, Stablecoins traditionally did not come with what we call native yields. And what I mean by native yields is, when stablecoins first came about, you could not, just by holding a digital cash equivalent, you could not earn the treasury yield, right? Now we're starting to see companies issue stablecoins that come with a native yield bearing aspect to it. So, for example, there's this stablecoin called USDX, and they have the native yield bearing asset version of it called CUSDX, which allows the holders to earn the current treasury yield plus some extra rewards. So if we look at the 10-year note, the current yield is like 4.2 something percent, right? In order, as a retail investor, in order to get exposure to that yield, or gain the ability to earn that type of yield, you would have to buy US Treasuries directly. Now, me, and I don't know about you, I don't know where to go buy any type of US Treasury,
I don't.
nor do I necessarily want to hold any type of paper, right? I mean, there's several risks with that, especially in this day and age. Anything can happen with that piece of paper.
Hmm.
So, what they're essentially doing is making it easier for retail or US investors, really not even US investors, anybody, to gain access to that type of yield bearing opportunity. In order for these stablecoin issuers to even offer something like that, they have to buy certain, US treasuries to mint or back the minting of their stablecoin, and they just pass the yield on. What a lot of people don't understand is, by holding cash and putting it in the bank, you're essentially passing off that ability to whoever else. The bank that holds your savings account and that's denominated in cash,
Hmm.
they're earning that yield. You are not. And then they kick you measly percent.
Crumbs.
Crumbs. Crumbs. It's ridiculous. If you actually know how this stuff works, it's ridiculous how basically we're being robbed by banks. That's basically what's happening. Um, so uh we know about inflation. We've talked about it several times on this podcast. There's an argument of what the actual real inflation is. Some people say 8%. Some people say just look at the 10-year note. That's what it is. So 4%. And then, latest numbers from Jerome Powell is like, I think 2.4% or something like that. So there's a debate to be had on what real inflation actually is. We see Trump and his trade wars occurring, with multiple countries. China, he seemed to have the most smoke with. So what I foresee is Trump or future administrations essentially giving the green light to these stablecoin issuers to mint stablecoins. In fact, I do believe a stablecoin legislative bill is coming up pretty soon. I think we talked about this months ago,
Mhm.
when right around when the Bitcoin Reserve Act was, hot in the news. So I do believe a stablecoin legislative bill is coming. I actually think one passed the Senate already, or it's going to the Senate. One of the two. So what I foresee is a high demand for stablecoins coming up, which means there's going to be a high demand for U.S. Treasuries. Now, what does that do for the U.S. economy? Well, the United States has benefited from distributing or passing off inflation and its debt overseas. That's why every American citizen is able to take advantage or have some level of quality of life because of the demand for US dollar overseas. There are more US dollars in circulation overseas than what it is here at home. And that's exactly how it should be. And that's exactly what you would want. A lot of countries do trade denominated in US dollars. You still can't buy barrels of oil in any other currency but the US dollar, right? There's several other things that we trade for using US dollars only. And why that matters is because as the United States, you want that to remain because that keeps your US dollar strong, or that keeps your national currency strong, and that reduces inflation that we feel at home. How are we able to do that? Well, that's by dollar distribution. Okay. Up until now, most people, like regular everyday people overseas, only get access to US dollars if one of us goes over there in the form of like vacation, tourism, stuff like that, and we exchange our US dollars for whatever goods or services that they're offering. Well, stablecoins kind of open that up, right? So by issuing stablecoins on a mass level, mass scale, that allows us to distribute our US dollars to a wider user base, right? So we're no longer just targeting major institutions overseas like banks, foreign exchange firms, other stuff like that. We are directly giving retail users around the world access to holding US dollars. And that's amazing for America because then that means that we're able to scale our distribution of our debt. And it allows just about everybody globally to have access to our debt by getting access to US Treasuries. Okay. So to bring this full circle, I see a demand for stable coins increasing pretty soon because not just us, but a lot of people overseas much rather spend US dollars versus their own native currency. So countries like inflation torn current countries like Zimbabwe, Venezuela, Argentina, and the list goes on. Those people do not want to spend their national currency because it's been inflated away. Way worse than ours, way worse than a lot of other countries like Japan or China with either the yen or the Chinese yuan. Okay. So by opening up our distribution access, that allows us to tame inflation home at a lot better rate. Even though I still think inflation will fluctuate, but this is probably the most bullish case for America to still be on top and still have a global reserve currency, all thanks to stable coins and the demand for stables that I foresee coming. A lot of institutions like Fidelity, they're launching a stable coin pretty soon. Bank of America announced that they're launching a stablecoin pretty soon. So a lot of these major institutions that are telling you that they're not in the crypto game or this and the third, they're lying to you. They're in the crypto game. They're in conversation right now. And I know this because I'm talking to insiders who are talking to these government entities, who are talking to these financial institutions, who are quite literally telling them that, hey, this is what's happening. This is what we're looking for. Can you offer any type of services or incentives for us to essentially deploy capital on chain? And crypto companies are delivering. So, like I said, man, they're focusing on stablecoins right now. Stablecoins are going to be massive, not just this year, but for the long term vision. I see stablecoins becoming a major piece to our financial stability as a country. Hell, I mean, looking at tariffs, the Chinese yuan is at 18-year lows against the US dollar. Nobody wants to transact in the Chinese yuan. That currency is garbage compared to the United States dollar. And I'm not trying to be disrespectful, I'm just being honest. So keep your eye on stablecoins, man. I can't really divulge any details or anything, but I know something. That's all I can say.
Hey, I'm surprised that you even told them that much. That's $1 million worth of game. I hope that didn't go over your heads. Replay it, do what you got to do. But hey, man, I hope you already missed that.
Bruh. And I know people aren't gonna understand that, and that's kind of by design, but don't be shocked when suddenly your bank is saying, hey, we have a stable coin that is earning you a yield that matches whatever the current treasury yield is at the time.
More than likely
Just
higher
simply,
than more than likely probably would be higher than what they would be offering for a high yield savings account. I think.
absolutely, by far, by far. And again, these yields can fluctuate, but don't be shocked when you're able to start earning a yield by simply holding cash or the digital version of cash. Don't be shocked when, certain opportunities that were excuse me, never presented to the common retail user are now just a regular thing, right? And I'm speaking from experience because, like I said, DeFi, a lot of people that I've talked to, they've stabled their portfolio for right now. And when I say stabled their portfolio, a large amount of their capital is parked in stable coins right now, but they're still earning either by native yield bearing stablecoins or through some form of DeFi where they're earning a safe 8 to 10%. And in crypto, 8 to 10% is actually pretty safe. And I've seen even some DeFi protocols offer way more than that. I'm talking 63% on stablecoins. So just simply saying, it sounds crazy. These numbers sound ridiculous and unsustainable when you look at it through the lens of traditional finance. But in crypto, that's normal. That's super normal. Like I think one DeFi protocol that I have some stable coins sitting in right now, I'm earning 23% on that parked capital. I don't know a bank that I can say, hey, here's my cash. I want to earn 23% on it. They would laugh me out the building.
Yeah, that's an insane figure.
And it's stable. It's sustainable. It fluctuates just like any other yield. The more and more stables that these protocols get deposited, the lower that yield will go. But I mean, these are the type of times we're in right now. It's a lot of uncertainty. You don't necessarily want to make life changing gains and still be exposed or have a lot of exposure in a volatile asset. You want to be able to profit or take profits off the table. And a lot of smart, savvy investors or even institutions, they're not selling and pocketing the cash and going to go cash out and spend it. What they're doing is they're parking that profit in stables and then going to go make a solid return off those stables. And they're living off the interest. I know people that are making 31K in DeFi plays right now, mostly based in stables. 31K a month. That's job quitting money.
Yep.
I at that point, bro, I'm turning it. This is my 2 week notice, and I may not even be waiting 2 weeks.
Yeah, ain't no 2 week notice.
I'm out.
Ain't no 2 week
If
notice.
I'm consistently making 31K, what am I doing? What am I doing punching the clock?
That's what y'all should be striving for, man. It's possible.
Absolutely. Absolutely. It's possible. It sounds crazy, but people are doing it. So I just want to give y'all some alpha around that. More to come. Be on the lookout on my personal YouTube channel and a couple other partnerships I got going. But yeah, bro, it's a lot to come. It's a lot to come. I'll say that in terms of the market. So
Well, there you have it, man. We're gonna get some housekeeping out the way before we get up out of here. A couple of a little bit of news that y'all should know. Tomorrow, 1:30 p.m., Jerome Powell will be speaking. That is all eyes will be on that, whether you're crypto or stocks. Everybody be paying attention to that. So that's something you need to know. Also, we are indeed in Q1 earnings season. So we have a lot of earnings coming up this month. We got ASML tomorrow, 8 a.m. For those of you who don't know ASML, they make the lithography machines for producing semiconductor chips. And then on April 17th, we have TSM. You all should know TSM. They make all of the world's greatest semiconductor chips. Then we have Netflix on April 17th as well. Then April 22nd, we have Tesla. That's a big one. April 24th, American, Alphabet, and Intel. April 29th, SoFi and Amazon. April 30th, we have Qualcomm, Meta, Robinhood, and Microsoft. And those will be the big earnings that I'll be paying attention to for the remainder of the month, man. And besides that, stay safe in their markets, man.
boy. Oh, one more thing before we do that. Be on the lookout for Circle IPO. Circle, the stablecoin issuer of USDC, announced their IPO not too long ago. It's going to be a big one. A lot of players want to gobble that up. A lot of big players want to gobble that up. So be on the lookout for that.
And from experience, you can do what you want. It's not investing advice. From my experience, from what I've seen on the charts, I would not recommend buying an IPO
Oh no,
on launch day.
no, no. I'm
you,
definitely not recommending buying it. It's
yeah,
just a massive historical
yeah,
event for a crypto company of that scale to be IPOing. That's all I'm saying.
for sure, for sure. But that's what it is, man.
Hey, quick and dirty, man. Make sure y'all stay diligent out there. Make sure y'all stay safe if y'all in the markets, man. Don't be making no crash dummy plays.
Mhm.
I did not take a trade in the futures market today. Them ranges was too much, bro. I want to play it safe. I'll try again tomorrow.
Yep.
So
But yeah, man, if I'll say start parking some capital. Watch and wait and see what's going on. If you're dollar cost averaging into any positions, of course, you can continue to make those dollar cost averages as we go lower. But be, I would say, be conservative right now, unless you just
yeah,
have strong, very strong, inclinations about a certain company, or you feel very strongly about a company into the future, 3, 5+ years from now. But other than that, dollar cost average or be stacking up that capital, man, because I think we're gonna have a lot more opportunity to the downside.
I mean. With that being said, man, we'll catch you on the next one.
See y'all later, man.
Peace.